Ever wonder how professional traders look at a chaotic chart and somehow predict exactly where the price is going to turn? It isn't magic, it actually comes down to two foundational rules of price action: support and resistance. Let's break them down. Think of these as the invisible boundaries of the market. On one side, we have resistance, acting like a heavy ceiling. On the other side, we have support, acting like a springy safety floor underneath the market. Every move the price makes is a battle between these two forces. Let's look at the ceiling first. When strong, bullish green candles aggressively push the market price upward, it eventually hits a wall. This is a zone where sellers are waiting. They flood the market with sell orders, completely overwhelming the buyers, rejecting the higher price, and forcing the trend back down. Now, flip it around. When heavy, bearish red candles are dragging the price down, the market hits a discount zone. Buyers view this price as a bargain. They step in aggressively with massive demand, halt the downward panic, and cause the price to bounce back up. Because of this constant tug-of-war, prices don't just move in straight lines, they flow in waves. The market effectively plays ping-pong, bouncing back and forth between these floors and ceilings until a breakout finally happens. Mastering this is your key to unlocking chart reading. First, spot the historic peaks and troughs where prices struggled before. Second, watch the candle reactions as they approach those zones. And third, use these levels to plan your entries and place smart risk limits. Keep it simple, trust the levels, and you're already trading smarter. If you found this breakdown helpful, hit that follow button, drop a like, and tell me in the comments, do you prefer trading the bounces or trading the breakouts? See you in the next video.